This is Robert Harper with Virginia Farm Bureau's Grain Marketing Division. Thankful and glad to bring you the Merchandiser Minute today for Friday, February the 19th, 2021. I know it's been a tough week this week. I think we cannot begin making any comments about this week without talking about the weather. Whether you were here in Virginia, a lot of you all have dealt with being out of electricity for 3, 4, 5, even some 6 days this week. I know that's made your chores and all the work a lot harder. We've had a lot of people that we all know in the southern plains of the United States and in the south that are dealing with unprecedented weather conditions, and it's really had a lot of ripple effects across the agriculture communities all over the country. So certainly my hats are off. My hat is off to all of you for all the hard work that you've done this week. When we think about it again, to start off this week, it's just been widespread sub-zero temperatures and multiple winter storms in various parts of the United States. And we saw a shortened trade week this week with President's Day on Monday. We saw this shortened trade week when the market opened Monday night at 8 p.m., a gap higher opening across the futures board. And it was across many different ag commodities, and a lot of it was centered around wheat futures, hard wheat and soft wheat, as the winter concerns of winter kill worked through traders over the weekend. And we definitely had a week that was based around weather as far as the influences on your futures price. Some information this week that came into the trade that was important to you. We did get numbers from Brazil's ag ministry this week. Early in the week, my numbers are a few days old, or I should say midweek. Brazil was 9% harvested, and normally they're in the low 20% on harvesting that first crop of soybeans. We know the later that they go, they're going to plant a lot of those acres back to corn, double crop or safrinha corn, and the later they go, that's harder for that corn crop to exhibit its highest yield potential. We definitely saw a lot of transportation issues here in the United States. The Illinois River, the government agencies that regulate the traffic on that river still have sections of the river closed due to ice. And we also know that across the country with the winter storm events, it's made truck transportation very difficult, very challenging for feed mills getting feed out to the farm, very challenging for packers and feedlot operators and moving livestock, hogs, birds all around. So it's been a big week. When we look at some numbers we saw this week from the National Oilseed Producers Association, NOPA, we got our January crush number for soybeans. Y'all are gonna like this. It was the second highest crush number on record for a month. The January total came in at 184.6 million bushels of beans crushed in the United States in the month of January. Really shows you a lot about the profitability going on in the oilseed industry, but about the need, the demand for beans and their co-products. On the ethanol report this week, we saw a pretty good drop in production, 2.8%. We saw stocks go up about 2%, but one ethanol industry analyst communicated to me this week that this week's report was the calm before the storm. We know with all the weather events that ethanol production has been off in certain parts of the country, and he tells me to expect to see an even bigger drop in production next week. We'll take a look at that. I also had one technical trader this week teach me something that he's had his eye on that I wanted to pass on to you. Managed money speculators, that group of folks that we care so much about with corn, wheat, and beans and how they're betting on future price direction. He told me this week that managed money speculators are jumping in. This is the second week now, jumping in pretty big in live cattle futures by buying and jumping in lean hog futures by buying. Again, this is, I guess we can make deductions or guesses for however we want, but there's a lot of money out there looking for a home. A lot of these money managers are still betting on overall inflation and food inflation, and to see speculator money going into live cattle and hogs might be a good indication for us to know that it's going to keep coming into corn, wheat, and beans. Crude oil hit a 13-month high this week, $62 a barrel. Look back at the chart. Remember January 4th coming into this year, we were at $47 a barrel. So let's take a look at how the futures closed out this week. March corn up 4 cents to close at $5.42. March beans up 5 cents a bushel for the week to close at $13.77. And July wheat up 13 cents a bushel of the week to close at $6.43. Remember, we know this is the third week that we've seen more of a sideways trade, but our ranges have been big during the day. Remember, in bull markets like this, a lot of times we see the high for the day in the night session. But if we look back, even though we were only up 4 cents for the week on corn, we had a 27 cent a bushel range. Soybeans, very low volatility this week, 24 cent a bushel range, and we've had weeks this year we've been as high as 60 cent on soybeans. So keep your eye on that. I still say that volatility is going to be present. It's going to come. We have to expect it when the speculators are running the show on the futures side of things. And also keep your eye on December corn, closed today at $4.60, your new crop contract, and November beans closed right near that resistance level of $12 at $11.96 for the week. So big news from USDA this week was the Ag Outlook Forum. This has been going on since 1923. This year's installment was as important as any of them have been. USDA really sets the tone, the projections for the upcoming crop year, and I want to run through a couple of numbers. They say it's going to be a big crop in the United States this year, weather permitting. Y'all can plant. We have an expectation from the USDA of 92 million acres of corn planted. Last year was 90.8, 15.1 billion bushel corn crop. Last year was 14.1, and yield they're expecting 179.5. Last year's corn yield came in at 172. When we look at the soybean numbers coming out this week from the USDA Ag Outlook Forum, they're expecting 90 million acres of beans. Last year, we planted 80, that number is wrong. I think we planted about 84, 85 million. I can't remember. 83 million last year, I believe, in 2020. Expecting 90 million in 2021. 4.5 billion bushel crop and 50.8 bushel yield. So the take home, there's a lot of information, look it up, USDA Ag Outlook Forum, but this should be, if this is realized, and again, this is a projection by the USDA, the largest combined acreage in U.S. history combined between corn and beans, the 92 million corn and the 90 million soybean. So what are we looking for next week? South American weather. We're going to see if it rains in Argentina. We're going to see how the harvest goes in Brazil. And we're also going to be seeing if Tom Vilsack gets confirmed next week by the Senate as our new USDA secretary. Would be his second term if he's able to do that. And our eyes are on March the 9th for our upcoming crop production report from the USDA. So I'll just leave you with, remember that marketing is never easy, whether we're in a bull market or a bear market. But what we have to do is keep it focused, keep it simple, keep it in front of us. Set your profit targets, put those wish orders in, and give Josie or I a call so we can help you do that, talk it through with you. This is Robert at Virginia Farm Bureau's Grain Division.